So the big tax question is this: how do wealthy people keep their money working for them when selling their business, real estate, or other highly appreciated assets without paying hundreds of thousands to millions of dollars in tax? What if we, as business and real estate owners who have poured blood, sweat, and tears to growing our wealth, and who didn't hire expensive tax attorneys and CPAs to map out an exit strategy, knew their secrets? Instead of recreating the wheel, why can't we just model the way they deferred 30 to 50% in tax, paid off debt, funded their next business dream, and most importantly, leave a financial legacy to give to the causes we believe in most? What if their secrets weren't complicated at all, and you just need a guide who is a few steps ahead of you? That is the question, and this podcast will give you the answers. My name is Brett Swarts, and welcome to Capital Gains Tax Solutions. Our next guest is a real estate attorney who specializes in helping people all things real estate related, but especially for investment real estate. He has an extensive background, having learned under one of the largest owners of commercial real estate in the nation with over 18 million square feet across the U.S., and then started his own law firm. His name is Jeff Love, and he's based out of Los Angeles. And I think you're just really going to enjoy getting to know Jeff a little bit on the show, where he's going to share a little bit about his story and his journey, and really focusing on hiring the right team, and we're going to dive into some estate planning and some capital gains tax things to look out for. He's going to talk about a deal where one of his clients was just too late, and had she called him earlier, he could have really helped her, but instead she ended up paying millions in capital gains tax that she's regretting now. So stay tuned for that part of the episode. And we look forward to you commenting or having any questions about this episode. So enjoy the show. All right, I'm so excited for our next guest here. Most investors struggle with finding an attorney who specializes in business and commercial law. Our next guest is an attorney who provides those types of services. In fact, he has provided strategic guidance for clients in all facets of real estate transactions, including drafting and negotiating purchase, sale, syndication, and financing transactions in connection with commercial real estate, whether it be industrial or residential assets. He also regularly drafts and negotiates office, retail, and industrial leases for regional landlords and tenants throughout the West Coast. He's located kind of right in the heart of Los Angeles. He also has an extensive experience negotiating and reviewing real estate loan documents, including originations, modifications, note purchase agreements, and other finance-related transactions, from structuring of the transaction to the closing of the loan, so really through A to Z. And he represents a wide range of corporate transactions, including private securities offerings of debt and equity, mergers and acquisitions, corporate governance matters, federal and state securities laws, and asset-based lending and borrowing. So these types of guests, for all the listeners out there, I call them the brain surgeons. They're the brain surgeons. They're going to be doing the surgery for your very technical situation, and where we see our role as the nurse. Our guest here, please welcome with me, is a brain surgeon in his practice, Jeff B. Love. Hey, Jeff, welcome to the show.
Thank you so much for having me.
Hey, Jeff, so our listeners can find you at jlove@gibbsgideon.com or guidon.com, which is JLOV@GIBBSGIDEN.com. That'll be in the show notes, but I want to get that out of the way before the show starts here. But Jeff, would you give our listeners a little bit about your background and your current focus?
Sure. So I always wanted to get into real estate. I just enjoy getting transactions done. I always kind of thought I was going to be more on the business side, be a real estate developer and build multifamily or retail buildings. And in college, I met a few attorneys that really focused on commercial real estate and kind of caught the bug. So after college, I went to law school and really fell in love with transactions, more having two parties while you're adverse from each other. You're both working towards a common goal. So whether that be corporate or real estate, rather than the litigation side when you might be fighting over one asset and you really have a winner and a loser. So I fell in love with the commercial side of it. After law school, knew I wanted to get in, said kind of commercial real estate, but it was in the downturn of 2009, and no one was hiring lawyers, much less transactional lawyers or real estate lawyers. So instead of jumping into kind of the first jobs that came my way, which were litigation and workers' compensation, which said I really wasn't my bag of tea. I was able to find my first job out of law school as really the first attorney for a scrap metal recycling company. And they actually brought me in because they were expanding. They had a lease they needed to be reviewed. They wanted me to kind of look at their sales contracts with customers. So I really got some experience being with a company and seeing, what they needed to grow and what their contracts looked like, what their real estate needs were. And I knew real estate was for me. So after a few years and kind of setting their ship right, I went to work for a real estate developer who still to this day owns roughly about 18 million square feet of retail and industrial assets throughout the country. And I did everything real estate related. So working on leasing for them and their tenants, helping acquire buildings, sell buildings, financing documents. And I loved it, was there for a couple of years and realized, you know, as much as I like working with one person and one developer, I love to do this for different size clients. So someone just starting out into real estate, another client like my current employer that has 18 million square feet, that's a huge landlord, and be able to represent, maybe both sides, maybe tenants and landlords and developers. So I came to Gibbs Gideon, my firm now. They were looking for a young attorney with real estate and corporate transactional experience. And gosh, this is probably 8 or 9 years now I've been here and represent clients of all sizes, mainly with their real estate needs, but also related, and kind of go by the acronym of a dirt lawyer, since I can help clients do the whole process. Developers from actually acquiring the dirt, building the building, raising capital to do so with construction contracts, and eventually, depending on the asset, lease it out through sale. So really the whole life cycle of the business, which I love, because you get to see something tangible being created where it was just some dirt before.
That's a wonderful background. Thank you for sharing. I'm curious, Jeff, before your success as a real estate attorney, before really getting your doctorate in real estate from working from a huge developer, and then starting on your own practice to help multiple level of clients in the different parts of their journey, who was Jeff growing up? And in particular, what gift were you given that has helped shaped how you help others today?
That's a good question. From a young age, I really thought that, just work hard and kind of have the right people around you. My mother was an elementary school teacher. My father started his own business. And I think how he was able to do it is he had, a really great accountant that helped him set it up. He had a great attorney that was actually able to help him create the business, and having that learning that it's, you don't have to know everything yourself. The hardest thing to realize, and I still think that's true as an attorney today, is to realize not knowing everything and knowing what you don't know is often the best thing, because then I advise a lot of my clients, especially newer real estate syndicators or developers. You can go out and raise money, you can buy the building, but without a great team, you're going to miss something. So having that accountant to be able to help you, having a attorney that can help you structure it, having a great real estate broker to go out and help you find deals, having that team in place from the get-go really helps you succeed. And that's something that I learned early on, and still is true. I'm not a tax attorney, but if I go next door to one of my partners that specialize in tax, I can get answers to that question. And that helps me advise my clients and get them answers when I need to, by having other attorneys, which is my team, in place today.
Absolutely. Taking that team approach and that humble approach that you might miss something or might not know something, and hiring that out, be willing to pay for that, or have strategic alliances in place so that you're servicing the client in the best way possible. So curious, Jeff, we talked, this show is focused on capital gains tax deferral. And before the show, we mentioned, we were talking about maybe a deal story that either didn't go so well, that was challenging because of it, because of not maybe having a plan in place. Walk us through maybe that deal, or anything else that comes to mind for making sure that you're properly prepared legally, but also knowing the financial implications if you don't.
Sure. I've got a perfect one that just happened a few weeks ago. It is a long-term client. We've helped her with kind of her corporate needs and in her own business, but comes from a wealthy family, and she inherited, I have to estimate probably $100 million worth of real estate from her parents who had just passed away. So a tremendous amount, and not really in the real estate business, so doesn't know much about it, and decided, it's been too much work. A lot of the assets that she inherited were big multifamily buildings or a couple trailer parks, so really management intensive. And she came from the kind of family where you do it yourself, you put in the hard work. So hasn't really had a property management team come and help her. So with that said, it's just a lot of work, and she really wanted to get out of it, and kind of the broker she's been using, steering her into triple net properties where much less management intensive, kind of get your check every month, don't have to worry about it. She got a great deal on a multifamily property, was an escrow, sold it, calls me probably 30 days before her 1031 exchange deadline, which she had set up to do, was ready to go, and said, I can't find a property. And I said, have you been looking? Are you aware of the deadlines? And she said, no, I thought I could just, as long as the accommodator held it, I thought I could just spend as much time as I wanted looking for another one. So she got bad advice from the accommodator and the brokers that were helping her. And by the time I really got involved, there just wasn't a property out there that the things that she was looking for and really wanted to stay in Southern California, where we're both located. It didn't make sense. They were overpriced, or there was just no cash flow, or it was too maintenance intensive. So she actually ended up just cashing out of the deal and was hit with a pretty large chunk of capital gains, given her parents bought it decades ago, that she had to pay. So I wish, if she'd come to me earlier, I could have helped her find a replacement property or explore other avenues that you specialize in to help her shield some of that gain. It was too little too late.
Yeah, running out of time. That's the biggest thing. We call it the sell higher 180 days later, or sell high, buy higher 180 days later. And that 45-day identification period, these are strict guidelines, and you've got to follow them. Otherwise, you get yourself in a whole lot of trouble. Unfortunately, that is a tough call. The deferred sales trust, just a little a plug here. We can save a failed 1031 exchange, although there's some stuff that's going on right now with a franchise tax board and such with that particular part of it. But we've saved multiple failed 1031 exchanges, and that would have been a good option for that. But the key here is not having proper planning. That's really the key. Figuring out what your vision is and not getting caught in a deal emotionally to sell high and before you know what the next cliff that's coming. You need to build that bridge, and that's by having proper planning and being with the right consultant, so you're not forced into deals where brokers are oftentimes, let's face it, I'm a broker myself and started at Marcus and Millichap. You're trying to sell, you're going to get paid when you sell and when the client buys, and those are the only two times. You've got to really have a plan in place for the in-between times to make sure that you don't get caught with the taxes. At the end of the day, you're paying the tax, no one else is. So having a proper plan is the most important thing to have in place before you sell. So thanks for sharing that, Jeff. Any other tips on that for tax deferral or other ways to properly plan with the clients who use your?
Just to piggyback off of what you said, is planning early. So when, if I could take a step back in this transaction, as soon as she decided that she wanted to sell, that's the time I would have advised her, okay, well, what's the plan? Do you want to cash out some of this money for living expenses or to diversify? Do you want to put it into another property and let it grow? What's your plan with this money? Where do you see yourself in 5 and 10 years? And have that plan in place before you decide to sell, so you can take advantage of different ways to save on capital gains, to defer into another property before you get up against a hard deadline. And that really planning ahead, it's not just for tax deferral and savings, but really everything in real estate. With some of my syndicators and buying deals, is really planning ahead, a couple steps ahead, so while I've signed my purchase agreement today, my deposit goes hard and non-refundable in 2 weeks. I haven't even started raising money from my investors. I'm going to run up against a hard deadline. Planning ahead, making sure you know what you have to do by what dates, so you don't get caught between that rock and a hard place, so to say.
Absolutely. That being said, shifting from capital gains tax to estate tax, especially for some of your ultra high net worth clients, what strategies are you helping to implement for them so that when their estate actually passes, they're perhaps either moving stuff outside of their taxable estate to avoid the 22 million or more if you're married being taxed, or 11 million if you're single? Walk us through some of those strategies you help with your clients.
Again, it goes to planning. So especially if it's someone's buying the real estate for a long-term hold, we've got different investors and they all have different minds, whether they're fixing and flipping real estate, whether they have a value add and it's 5 years, or what, I'm going to buy this property for the appreciation and I'm buying it for my kids, so I'm going to hold it for 30 years. So depending on what situation you fall into, some of the strategies, okay, when I buy my property, I'm going to gift a small portion of it to my children. I have a value of the property. I've just purchased it. I don't necessarily need to pay for an appraisal. I'm going to give my children each $15,000 worth of this property to get it into their name. And depending on the value of the property, that could be, a significant chunk. Obviously, Southern California, we're very expensive, smaller, but I had a client do that exact thing. He bought I think roughly a $2 million duplex. And off the bat, he gave him and his wife both gifted their two children that $15,000 exemption. So their kids are already in this LLC for about 9 or 10% each, and that's already out of their estate. The benefit to the LLC is, they're the manager, so they don't necessarily have to make certain distributions to their kids. They can kind of have a better control of where this money and distributions are going, but at the same time, they have it out of their estate. So when this property grows, it's one less thing to do. And each year, especially if they refinance or there was an event where they had to get a value for this property, they can make subsequent gifts and get a little bit out of their estate each year.
Excellent. And I found that sometimes the two get a little bit confused, the capital gains tax and the estate tax, and especially the stepped up basis, right, that you get on the capital gains tax. But clarify for us or help us, these are separate, right? These are completely separate. Estate tax is your overall taxable estate, and that's everything. It doesn't matter about the stepped up basis or your capital gains tax. That's separate. So walk us through making sure people are aware of those differences.
Sure. And one more to consider, especially in California, we have Proposition 13, which limits the amount that our annual property taxes can increase every year. So we also have reassessment to consider. So capital gains, your simplified example, I buy a property for $100,000 and 20 years down the road, it's worth $1 million. I've got capital gains of that difference, obviously taking into account money I've put into the property, but generally that increases my capital gains that I'm being taxed on. My estate taxes, myself and my wife, we own a business, we own real properties, so we have a general estate of $20 million. When we pass away, that goes to our children subject to the estate tax, and if that was above that $22 million limit, that would be taxed, I believe, is about 40%. So you want to plan for that, and it wasn't always 22 million, and there's a sunset on that. So some of the clients I have, and we don't focus on tax, they're concerned about that with their real estate holdings, and they want to figure out what they can do while the exemption is so high, because it can go back down. And the third component to complicate it more is the reassessment. So you've bought a property at $100,000 in our example, it's being taxed at $100,000 with, I think, 2% annual increases. If I were to go buy that property today, or I were to change ownership of my entity that holds it, now I'm being taxed at $1 million. And when you've owned property, especially in using Southern California, New York, states with high property values, over a 10, 20, 30-year period, it can be an enormous increase in property taxes. So you want to be careful how you structure it, and you don't inadvertently sell 51% of it or bring on new investors and you accidentally trigger a reassessment, and now your property taxes have just dramatically increased.
And to that point, I'm curious, Jeff, for if it's in the estate, imagine it was a $2 million estate that's now worth $30 million over a 40-year period of time, and they've done all the depreciation, right? and maybe they have a zero basis, but also it passes the estate. Is that going to trigger a reassessment on the estate passing?
In California, depending on the type of the property, for your residence, it's exempt. If you're talking about commercial property, we have $1 million exemption. So you can, if it's up to $1 million in property, you can transfer that, not even with your estate, but you can transfer that at any time and have that be exempt from reassessment. But when your estate passes or you're beyond that limit, that portion will be reassessed.
I see.
You get a
So
step up in basis for your capital gains.
If was 30 million, and you're saying 1 million of that would be exempt, but the other 29 is still subject to property tax reassessment.
Yes, in California for your commercial real estate.
Commercial real estate. Yeah. So again, the importance of planning, not only for capital gains tax, but for FLPs, LLC gifting for kids, for property tax reassessment. The tax code is complicated, so you want to get professionals who are focused in this and can map this out for you before the event happens, right? Before the health challenge comes on, before you go to sell anything, right? Be prepared for this. Okay, any other tips on that, Jeff, or things to touch on for capital gains tax, reassessment, or estate tax?
Really, I think it's what we've been talking about, planning, and not just maybe your real estate attorney or your accountant, but with your estate planning attorney. So you can potentially, there are trusts that you can utilize to help with your planning and just making sure that you're not forgetting one of these components. Because as you said, the tax code is complicated, and it's not just the estate tax or income tax or capital gains tax, but you also have reassessment in your property level tax.
Excellent. So now focusing back on your services and what you're doing to help people create and preserve more wealth, what would some of the standard questions if someone's interested in, hey, I think I could use or I need to hire, Jeff, what are some of the key things you're going to be asking him? You would be an ideal fit for exactly what you specialize in?
Depend on what the client does. So we practice really commercial and real estate transactional law. So what we're trying to do is help not only from a liability and structuring standpoint for the client, but also be able to bring in a tax accountant or attorney when needed to be able to help structure them that. So for example, a client may come and say, I really like real estate. I want to come in on this, this new business. I'm going to start syndicating deals. I'm going to buy this. I'm going to buy this duplex. What is the best way for me to structure this? Not only to protect myself from, maybe a tenant has a party and someone comes and slips and falls. I don't want to get sued and obviously have the liability and financial loss that comes with that, but I also want to plan for the future, and I want to make sure that I'm limiting my taxes to the extent possible. In that situation, you don't necessarily want to own it as an individual. If you own it in, an LLC or a different type of entity, you get that liability protection. You have the ability to deduct expenses and kind of lower your overall estate. It's pass-through taxation unlike a C chapter corporation, so you're not paying double tax. So it's really depending on the client's business. One of the questions we get, really from the get-go, is how to structure my business for that business. And each industry is different. You may be actively working in the business, and maybe a subchapter S corporation makes sense because you can save some money on taxes rather than I'm passively investing in real estate and I'm just collecting my rent every month, where the simplicity of maybe a limited liability company makes sense. And we help them structure the business, guide them through the best choice, and then kind of engage as outside general counsel, helping them with contracts, if it's business, real estate, with purchases and sales through the life of the business, whether that's a real estate company or potentially a startup in another industry.
Excellent. Yes. So real estate, investment real estate in particular, and it could be a wide range of focuses within structuring, litigation, or setup, and making sure that you're calling Jeff and you're basically saying, hey, this is what I'm trying to do. What approach would you take if you have investment real estate, especially as it pertains to buying or setting up any kind of partnerships, or even just your own single deals, and how the best way to do that with an LLC. So all of those things are, as a reminder, you can reach Jeff at jlove@gibbs. Guiden.com. It's a JLOV@GIBBSGIDEN.com. Hey, Jeff, I'm curious, what's the most rewarding part of what you do?
It's got to be helping people from creating the entity and the business to really the lifespan. It was probably 5 or 6 years ago, we created a visual effects company. And it was just a couple guys that had worked for other companies, and they said, I think we can do it better ourselves. They just brought in their latest round of investment and put that company at $100 million valuation. So creating it when there was nothing before, seeing it grow, helping them with all the bumps along the road until today, it's just rewarding. And seeing, the success that we can have a little part of our client's business that we're able to contribute and help them achieve their goals.
Absolutely. Serving others with your gifts and talents to help other people achieve their vision and their goals, and being kind of a part of that big story. That's amazing. I love that. I love that answer. Will you also share with us now a little bit about those that you work with? So now shifting out of like the client itself, but more so the business professional. So you are a real estate attorney expert. I told you, like a brain surgeon. I consider you a brain surgeon, but you're also a wealth advisor along the way. So I'm curious, how do other business professionals best work with you to essentially either partner or send you referrals to help to really help others really just spread the message of these important topics?
Sure. So we work, every day with other types of professionals, whether accountants, commercial real estate brokers, financial advisors. I just this morning have been corresponding as a referral from a client, but a financial advisement firm in Brazil, which is, we have a number of clients from there, and they have a client that's looking to form an LLC in California to hold real estate. So we're going to work with them and help them structuring it from a legal standpoint, while they're advising him as to the tax standpoints and his financial growth. But we're working together to protect the client. Another example, I've got an accountant we work with a lot. He's a great guy, and he had a client that was recently selling his pizza business. And he was advising him from an accounting standpoint as to the best way to structure it. And he brought us in to help actually prepare the purchase agreement, to document the sale, and to make sure that we were able to limit the client's risk as much as possible in terms of making certain representations as to his business and limiting any ongoing liability once the sale closed.
Awesome. That's fantastic. So connect with Jeff on, if you are in any of those fields and are looking for an expert in this area. So ready for the lightning round, Jeff?
I'm ready.
All right, what's your favorite book maybe you read recently that you would recommend?
Favorite book? Oh, sorry, you caught me on the spot. I have 2 little kids, so my favorite book is probably going to be Llama Llama, that series. It is not business related, but my kids love it, and he's starting to read it himself. So Llama Llama.
Llama Llama. Hey, I love that. And spending time with your kids and reading and seeing them read is rewarding in itself. I love that. How about favorite podcast maybe you listen to?
Favorite podcast? I've done a lot of podcasts recently. I don't think I have a favorite. The real estate podcasts, I think there's a lot of good guys out there. Sean Pan I've done one with Ellie, Charles Dobson. Check out some of your real estate podcasts on iTunes. I don't have a favorite, but there's a bunch of great ones out there.
For sure. Maybe favorite athlete or sports team?
Favorite athlete. I've got to bring up Kobe Bryant with, when we air, with his tragic passing. It's living in LA. It shows me how great of an athlete he was and the impact he's had on our community. So I'd say Kobe.
Maybe share maybe an insight for the listeners who are not from LA. Maybe a story that maybe is not on the news. I don't know if you know someone personally or connected with Kobe, but being there all those years, anything that comes to mind with kind of give some more insight on the legacy that he's been able to leave there?
think he was just an asset to the community. Seeing some of my contacts just on a personal level, whether it be LinkedIn or even Instagram. I have a friend that's a real estate broker and who actually sold houses with Kobe. He, helped him buy and sell houses. And I guess Kobe, hearing his story, was Kobe actually opened up the Staples Center for this gentleman's son's birthday so they could run around and play on the court before a basketball game. And although it didn't affect me personally, seeing that, I'm sure this is one of many, many stories out there where he did things that you may not have heard about. It just kind of shows what kind of person he was, maybe off the court.
Love that story. Yeah. Wow. That's using your influence and what you have to help and bless others in a way that could be small for you, but really life-changing and big, especially for young kids who love basketball. I grew up playing basketball, so that'd be like a dream come true for me if I was a kid. That's awesome. So finishing with this last question, how do you stay centered, Jeff, in your values, and how do you stay encouraged to charge forward to reach new goals?
I think it goes back to what we've been talking about, just planning every time, every morning, kind of plan out what my day is going to be to make sure that I have time for what's important, not just in work and servicing clients and getting back to people, but outside of work with kids, with other social events and things going on in life, is making sure that I have time to get everything done that I need to.
Love it, Jeff. Well, I appreciate your time and sharing all your wisdom. And I want to thank our listeners again for listening to another episode of Capital Gains Tax Solutions Podcast, where we believe having a clear plan for capital gains tax deferral, such as pre-planning in the future for deferred sales trust, 1031 exchanges, is the key to helping you create and preserve more wealth. So we encourage you to reach out to Jeff. Again, his email will be in the show notes for any real estate needs you have, and we look forward to connecting with you on the next episode. Thanks so much. So having a brain surgeon is a great starting point for any tax deferral or tax advice you're looking for. You want to find a specialized attorney, and that's what Jeff Love is, especially in the Los Angeles area. And what a great wealth of information and experience. So I took a number of things from this episode. Really finding what your passion is and then focusing on that is a theme, as well as learning under somebody who had a ton of knowledge. So he joined a group that had 18 million square feet of real estate, and he essentially did just about everything related to real estate within that company, and also legal work through the company. And then he was able to take that knowledge and start his own company and be an entrepreneur by himself. So learn under somebody. If you have a chance to join a group or a person who has tons of experience, join that group and learn and get an education, hands-on training. Also, knowing what you don't know, right? That's a great place to start with anything. Essentially, the more you start to learn about something, sometimes the first thing for me, I know especially, is you start to realize how much you really don't know. Even with capital gains tax deferral, I've been studying it for years now. I'm still just a nurse. I'm just taking the pulse. It's the brain surgeons like the Jeffs or like the deferred sales trust brain surgeons who do the surgery. And the important part is knowing your role within whatever context you're in, right? So make sure you're hiring that CPA, you're hiring that tax attorney, but is that tax attorney specializing in estate tax, or is it capital gains tax, or a real estate attorney, right? Having each of them, they all have their niches, and it's important to find out what you're trying to accomplish, and then hiring and partnering with those individuals are going to help you reach your goals. Also, he touched on FLPs, LLCs, and gifting. We love that strategy too, especially if you know it's in a time period where you have enough time. But if you run out of time, or if you haven't done any of the gifting, this is where the deferred sales trust is so powerful, and that you can now sell an asset and move the entire asset outside of your taxable estate while deferring the capital gains tax, because of the deferred sales trust. So the deferred sales trust is the tool for that exact strategy. And so reach out to us if you haven't done the gifting, or especially if you're looking at any estate tax, we can really help you out there. And then, of course, make sure you're taking in consideration the reassessments to consider as well, and the property tax and what that might be there. Again, the overall theme is plan, and be ahead of all of these things. So those are the thoughts for today's episode. And thanks again for listening, and look forward to connecting with you always. You can reach out to us at capitalgainstaxsolutions.com if you have any needs or challenges with capital gains tax. Thanks so much.
You have just listened to another information-packed episode of Capital Gains Tax Solutions with Brett Swarts. We hope you enjoyed today's show and found it helpful. Visit capitalgainstaxsolutions.com to access the show notes and to access more resources. Don't forget to leave a review and join us again next time.